Good morning. This is Tom Alexander. It is Sunday, June 12th. It is about 10:09 a.m. Eastern time in beautiful Charleston, South Carolina. Here's the bottom line, and it's much simpler than most people are making it. One thing that we can know with certainty, let me show my screen. And by the way, housekeeping, if you would like this video, it would be very helpful. Please subscribe to the channel. You'll be notified when I post new stuff. And if you have any comments or any questions, please post them below and I will respond. All right, let's look at the charts. Okay, we're looking at weekly charts. And this is pretty much all you need to know right here. As I put in the report this weekend, the written report that all of you should have received. If you're not receiving that, send me an email to tom@alexandertrading.com and I'll put you on that list. It's free. One thing we can know right now, about the only thing we can know with any high confidence level, is that to restore a bullish view, any bullish view in any time frame, all four of the indices you see on my screen, the four primary U.S. trading indices, would have to close above the levels that you see on the screen, basically last week's highs. Now, to the downside, those levels are very important, and what happens near those levels, it can only, there are a number of possibilities there. We could trade below them slightly in one or more of the indices, and then that puts in a short-term low. There are a number of possibilities. We could trade between the two levels that you see on this screen for the next, who knows, 6 weeks. There are a number of possibilities. So once again, as you look at this, the only thing you can really have any confidence in is that if the indices, all four of the indices, were to close above last week's highs, the level shown on this chart, to the upside, then that would restore some bullish scenario. And that's what it would take to restore a bullish scenario. All right, let's look at the daily indices. We can fine tune this a little bit. Now I want to look at the cash charts. Here we go. So here are the cash charts. Now, we broke out of this balance area. This was a very tight, very extended balance area, which was unusually large for the stock index futures. Balance areas in stock index futures typically don't go this long. This one did. We broke strongly and initiatively to the downside. We gapped lower on Friday. Friday closed on its session lows. So that's, from a market condition perspective, that's initiative. It also implies lower prices. I expect, or I think there's a high probability that one or more of the indices will take out the May low. Now, a slightly, maybe, I don't know, I hesitate to say bullish look at this interpretation is the fact that the Russell is holding up relatively well so far. So, but if we're going to go into some sort of waterfall crash mode, which is a possibility, the Russell is going to play catch up to the downside. So that's something we need to watch. Otherwise, if we do go to a new low in the cash sessions anytime next week, it's going to be critical to be watching at that point in time what happens. Because it's possible that's part of a bottoming process that includes the May low. There's no way to know in advance. It's just anyone that is drawing a line in the sand in that regard is just guessing. There's just no way to know. Let's look at the profile view real quickly. Now this is the profile view in the SPX, the S&P cash. I put this is in the report. I talk about it in the report. I had outlined last week the idea that we would form balance in here. That's certainly in play, as you can see. Now, as we go to the technical view of the market, this is something I put in a report each week and I discuss in the video each week. It's breadth. It's NYSE breadth. The red line is a 10-day moving average of NYSE advancing issues. The green is typically a 5-day moving average of advancing issues. And this week I'm using a 2-day because it sort of highlights an extreme, and it's really unusual to get 2 back-to-back days of negative 2,000 breadth. And that's what we saw Thursday and Friday. That is typically capitulation-like selling, at least in the short term. You can see down here, breadth has been negative 3 of the last 4 days. So the very short-term moving averages of the NYSE advancing issues are extremes that have not been seen since the March 2020 lows. As you can see, you see all the green arrows on this screen. This is typical of a bear market or severe correction within a bull market. It doesn't really matter. It's semantics which one we're in. We're certainly in, continue to see this a bear market signature in the relationship between price and breadth. And we're just seeing more of that now. If we do get severe selling on Monday and Tuesday, it's probably going to put in a short-term low because you're going to get so compressed to the downside, you'll get this face-ripping rally. So this sets up a fascinating scenario as we head into Globex, and then we head into the cash trade on Monday. Also, the narrative. You can't trade the narrative, but the market is being really, the macro narrative is really holding. The market is trading around a macro narrative, I guess. Now, which way the market goes, let's just use price action. But the current narrative is that, okay, next week we have FOMC. We also have a huge option expiration. So as we come into Tuesday's trade, if we sell off really, really hard Monday and or Tuesday, then I think at least you'll have some sort of pause as we come into the FOMC on Wednesday, and then possibly even as long as into Friday. But next week is setting up to be quite a volatile week. It should be a fascinating, interesting week. And there are going to be tremendous opportunities. I hope you guys found this helpful. I hope some of you will join us in our monthly membership that includes the live trade room. This is a wonderful time to be following the market in real time. You guys have a wonderful weekend. I'll talk to you soon.